Hey guys, Jason Schnitzer here with Remax Tiffany Real Estate, and what I've got for you today is my How's the Real Estate Market segment for week 30 of this 2022 real estate market. As always, what I try to do here for you guys is let you know what's going on here in the last 7 days in Orange County, California. And you know that I like to start off with statistics. When we look at stats, it helps us potentially track trends and get into a little more of that crystal ball stuff that everybody is oh so curious about. So we're over 4,000 homes for sale in Orange County. That is up from 1,100 homes, our all-time low back in January of 2022 here. We're already up almost 3,000 homes. And again, week over week, we're continuing the trend of adding more new houses coming on the market than are going off. As far as interest rates go, if you've been watching my videos, you know that we've been up as high as 6% with regards to interest rates. That's when these mortgage companies were really reacting to the Fed's aggressive interest rate raising on their short-term rates. And quite honestly, I'm not too sure how that's going to pan out through the next 2 quarters. The Fed has come out and said, hey, we are going to be aggressively attacking inflation. As you know, if you follow my videos, numbers came out a couple of weeks ago, higher than expected, 9.1%. Some people think that it's really higher than that based on the actual data that they use to predict what inflation is. Especially, I know amongst my sphere, we're really feeling those numbers just at the grocery store when we go fill up for gas, etc. So again, getting into what I think the next 6 months is with regards to interest rates, the big key I think you guys want to pay attention to is this week, July 28th, the GDP numbers are going to come out for the second quarter. And a lot of people think that those numbers are not going to look very good, especially with regards to inflation. And what that's going to trigger potentially is what is the technical definition of a recession. That's 2 negative quarters of GDP decline. And the big thing, again, going back to what's actually happening with economics of our country and the numbers that are coming out with the message that our administration is telling people. So far, what I've heard from our speaker and all that, I'm sure you guys have been paying attention to the news, and our president saying that our economy is doing better than ever, etc., etc. Well, the numbers are somewhat speaking differently. And what does that mean for real estate? My lender likes to say, with regards to investing in real estate and finance, etc., people typically act on 2 emotions, and that's fear and greed. And we are certainly coming out of what is somewhat of a greed market, affordability market. Money was flowing freely, money was inexpensive. Well, there's a certain percentage of people that just believe that our economy is the strongest it's ever been because that's what our administration is saying. It'll be interesting to see what happens to the general tonality of messaging around our economy when these GDP numbers come out, because with, call it the R word, recession, that stirs a lot of uncomfortable thoughts and feelings in people's minds. Mostly that fear side of things. So when people make decisions out of fear, a lot of times, especially with stock markets, there's fear selling. We saw a lot of that, of course, when this pandemic hit back in March of 2020 with our stock market down into the 18,000s, if you will. So taking this back into real estate, where are people going to put their money? Where are people going to feel safe and not afraid to put their money? Well, historically speaking, again, real estate is one of those places. As volatile as the stock market is, and even more so with the crypto market, real estate is a needle moves a lot less quickly than those 2 different markets, especially when you take into consideration, comparing our market now back into what it was in 2007. The majority of our homeowners now are in fixed interest rates versus a variable rate. No balloon payments, no adjusting for people's payments. Not only that, but people have a lot more equity now than they did back then with regards to when they bought their house, in 2007, 2005, 2006, a lot of people were putting 0% down. Well, the majority of our home buyers now are putting more than 20% down. So as we say in the business, it's a lot of skin in the game. So as far as predictions for the next 6 months, I'd rather you guys just keep on watching my videos because I'll have a better week by week update, because 6 months predictions are pretty tough. But anyways, that's what we've got for now, and I appreciate you guys watching. If you have any questions with regards to your real estate portfolio, with regards to getting into the real estate market, or maybe you're thinking of moving up or moving down or moving out of state, we offer free real estate consulting. Just give us a call, reach out to us via email, any of my social media avenues. Happy to provide you with more information. Thanks for watching, guys. Catch you next week. Thanks again for watching this week's episode of O.C Realtor Talk. If you gained any value from this video, we'd really appreciate it if you liked, subscribed, and followed us on all our social media platforms.
Yeah, what Jason and I believe is really, really important for you, whether you're buying a house or selling a house, is understanding the process and knowing exactly what you're getting into. So if you ever have any questions, just follow the links below and we'll get you those answers.